Hello, guys. How are you doing? And how is the market treating you? It's your boy Everest FX, and welcome back to another beautiful class. This is going to be a continuation of our previous class. Now, today we are going to be talking about order flow. So, which will be our first topic for this video, order flow. Now, what is an order flow? Now, an order flow is a pullback to mitigate the previous broken structure. It could be an uptrend or a downtrend or even a reversal. Okay. Now, when I taught you guys on market structure, I told you guys that the market creates a higher high, a lower low, right? A higher high, a lower low. This is now where the break of structure happen. If it's a bullish market, then the market will create another higher high, which will cause a break of structure and a lower low. Now, this order flow now that I'm talking about is when a market creates a high, a low, let's say in a bullish market. Now, we have a break of structure here like this. This is a break of structure, right? Now, this is your order flow here. You just take your rectangle tool and mark from this low down to where the market broke structure. This was where the market broke structure here. You mark to that place and draw it like this. And then you wait for the retracements that will come back like this. And then another break. When we have another break, you mark from the low up to this was where the break of structure happened. You mark that place like this. So now, one importance that you're supposed to know about order flow is that order flow are usually like, should I say, a bias for our order block. Okay, let's say now you are buying and this market came back and mitigated this order flow, then broke structure. Probably there was an order block here. Now, that one alone will give you a sense that this market is not coming back here. Why? Because it has already mitigated the previous order flow. I don't know if you understand. Order flow is a part of market structure. When you have a high, you must have a low. When you have another high, the market will have to retrace. That's why in the definition I said that order flow is a retracement to mitigate the previous broken structure in order to balance price. Do we understand? So in order for the market to balance price, the market will have to come down like that. Do you understand? Now, you had a break of structure here. In order for the market to balance price, remember that the market moves in wave like this. Moves in wave like this. Same thing for the downtrend. It moves in wave like this. So in order for this market to balance price, the market have to come down to mitigate the previous order flow and then make another break of structure. That is just what an order flow is. Now, this is on an uptrend. Now, this is an uptrend. Uptrend. Like this. That's a bullish market. Now, there was a break of structure here. There was a break of structure here like this to the upside. And the markets came back. Once the markets came back to this place and broke structure again, you see what I wrote here? Order flow mitigated. That means this order flow have been mitigated. So this market now will not come straight like this. It might come and do something like a high, a low, a high, a low. Just do so many things like this. Then tap into any supply, any demand here, and then goes up. So I taught you guys about market structure. You should go and still rewatch the previous video on market structure, because order flow works with market structure. You need to know market structure in order to trade order flow. And also, you also need to know order block. So let's go into the chart. Let me show you guys examples of order flow. Let me show you guys examples. Okay, let's use this place. So we'll start with I need a perfect example since this I'm showing you guys this for the first time, so I need a perfect example. This is Euro USD on a 4-hour time frame. Now we have a break of structure here. We had a break of structure to the downside here. This was a break of structure, right? Now where did this market broke structure? Now this is a downtrend. You mark from the top to where the market broke structure. This was where the market broke structure. You mark it like this. This is just for beginners purpose. In advance, you don't need to mark all this thing with your eye. You can spot it. Okay, so now after the market broke structure, the market now came back to mitigate the order flow and then broke structure again. Where did the market break the next structure? Here, right? Now our order flow starts from where this market broke structure like this to where the previous high is. That's on a downtrend. This is the previous high now after the break of structure. So you mark to that previous high. Let me delete this one. You mark to that previous high. Now this market broke structure. After there was a break of structure, what happened again? The market made a retracement and still broke structure. This another order flow. Now, see, one thing that you're supposed to know is that order flow give you a particular focus. Now, let's say for example, now this market broke structure at this place. There was a break of structure here. Now you know that okay, your order flow is just between this range. That's when we are talking about a higher time frame. This 4 hours. You know that anything that you are looking for is between this place down to this high. So you might be expecting this market to, after it has broken structure, to come back probably to here. Look at this order block here, the one the market use. I don't know if you understand. So you might be expecting the market to come back to this place, then you can continue your sell instead of looking at all this up, all this place. Now with order flow, you'll be able to focus on a particular point to focus on. So instead for you to be looking at all this place, you already know that okay, if this market breaks this order flow, it's a sign that the market might be changing direction. Now after this break of structure happened here, there was a pullback. Another break of structure happened here. There was another pullback. This is a pullback. Now, if you know order flow, you know that, okay, the order flow is, since it's on a downtrend, you mark from the high down to where the market broke structure like this, then you extend it. Now, you know that the only thing you are looking for is in this place, between this box. You might be looking for this order block here, this one here. You might be looking for maybe another block on a lower time frame here. You can see that the market just came back and continue selling. Since you already know, based on your structure, the market is breaking structure to the downside. That means it is on a downtrend, right? So with order flow now, you will have a particular place to focus on. Now this is a break of structure here, like this. This is a break of structure here. This was a break. Now where are you going to focus on? You take your rectangle, mark from the high that was created down to where the market broke structure. So you know that the place that you are going to be focusing is only within this box. Look at the market came back to this supply and continue selling. Okay, sorry for calling it supply. That's your order block. Let me use the word order block. It's still supply, but based on the previous class, we only talked about order block. So for now, I'm going to be calling it an order block. In the future, we can study more. Now look at this point. Look at this high where the market created down to this point where it broke structure. You see that the market didn't come to that place. That means this order flow is unmitigated. This order flow is unmitigated. So with that now, let me delete this one. This one, you see that at this point, the market came back to mitigate it after a break. After a break here too, the market came back, a break, came back to mitigate it. But here now, the market broke down like this. It hasn't come back to mitigate this order flow in order to continue. So this order flow now is unmitigated. A mitigated order flow is the order flow that the market have retraced back to. I hope you understand. Look at what happened. The market came back and then broke the order flow. Broke the order flow, retest into it, and go. In the future, we are going to study about breaker block. We'll study about flip zone and all of that. So, but for now, let's just focus on order flow. Okay? Look at this order flow is not mitigated too. This one too. It's on a downtrend. So you mark from down like this, straight to where the market broke structure. You see that we are expecting this market to, after breaking structure, to come back like this and continue buying. But the market didn't come back. Now, in a situation where you see something like this, you know that definitely price will come to that place to mitigate that order flow. And at the same time, you know that there is high possibility that if price come back to that place, the price is going to sweep liquidity. That means it's going to sweep that place or break that place. So just have that at the back of your mind. Okay, look at what happened here. This order flow was unmitigated. The market didn't come back like this to retest it. The market now created another structure. This is a high, a break of structure, a retest to this order flow. Then when the market came to this one, it respected it. Look at it, it respected it. Now break it. So just know that anytime you see the market leaving another flow like this, the market usually breaks it. Not all the time, but most of the time, the market usually break it. If it come back to that place to retest, it will respect it partially and then break it most of the time. So let me look for a bullish example on order flow. Since that's a buy side, we already talked about the sell side. Okay, we have one here. Okay, so here is one now. Remember, if you're marking your order flow, when the market is buying, you start from down, you mark from the down to where the market broke structure, then you extend it. This was a break of structure here. This was a break of structure. And then you do what? You extend it. Now, this market made a high and made a low. Now, it just tapped into this one with a wick and sharply it went up. Now, we have another new order flow. Now, you mark from the low to where the market, this is where the market broke structure, then you extend it. You see that after the break of structure here, the market came back into the order flow and continue. With this one, you should know where to buy. You should know where to buy and where not to buy. Look at, you mark from the down to the top and then you extend it. This market came back and broke this order flow, then came down to retest the previous one before it continue the upside move. Now, this also another break. You can see that the market always comes back to retest the order flow. It always comes back to retest the order flow. So order flow is very important in trading, especially if you are an SMC trader, because SMC trader usually use market structure. Like market structure is one important part. If you are an SMC trader, it's very important. Now we had a break of structure here. Look at this, a break of structure to the upside. The market came back and respected that order flow before it continued creating other structure. So that is just what you need to know about order flow. That is just what you need to know about order flow. So coming, I want to teach about something else now that is still related to the order flow. Okay. Now this is a break. Now you know that you cannot mark the whole of this place from here to this down, then you extend, right? Now you cannot be selling from the whole of this place. You need a particular point where the market will come to, then you can sell. That is where an order block comes in. Now, the whole of this point I marked like this could just be this 4 hour. If you go to daily, the whole of these points might be something like this, just 2 candle. Then maybe another candle here like this, and then a week. The whole of this point might just be something like this on a daily or weekly. This one will be like this on a lower time frame. So, but you cannot be selling. Let's say you want to sell now. You now say you want to enter from here, this point, put your stop above here. No, this is where the order block I taught you guys comes in. The order block I taught you guys will now come in now. This is another block here. This one. I hope you guys know. This is another block. You mark this one, you wait for confirmation. Look at the extreme. I taught you guys about this one too. This is another block. So let's say this market came here, you look for confirmation. You can start selling from here, you put your stop above there and start going down. After we have a break of structure here now, you wait for the market to come back. Okay, this market didn't come back. The market might start creating order flow below it. You continue like that. I don't know if you understand. Okay, for example, this was a break here. We had a break here. After the break, now, let's say, after this break like this, we're expecting this market to come back. All right? Now, let me delete this. Now, this was another block here. This is another block. And then this candle is also another block. This last bearish candle, you can see it also swept liquidity. This is another block. Let me delete this smaller one. Now, you waited for the market to come to this place. You wait for a retracement. Since you know that the market is on a downtrend, you wait for a retracement and a break. So order flow is very important. Okay, so now let me give you guys a very simple step on order flow. First, you mark from up here down to where the break of structure happened. Now, you make sure that all your structure, you mark them out so that you will be able to, if the last structure was a break to the upside like this on a higher time frame, now you know that, okay, this market is going to be coming down. Then you wait for it to come down to mitigate this order flow. Then you go to your lower time frame and probably look for a confirmation to continue going bullish. So, but for now, we won't talk about that. What I want you to know is that when you mark your order flow like this, you then start looking for an order block. This is another block. I taught you guys about this order block. So this is another block. When the market comes to that place, you look for your lower time frame confirmation to continue the sell to the downside. So order flow is very important in your trading journey. Look at this bullish aspect. This was the order flow. Look at it. What happened? This was the order block here. The market didn't reach that place, but this was a breaker block. I'm going to teach you guys about a breaker block probably in our next class. You can see that the market came to the breaker block and zoom. So now, one thing that well, let's leave that for now so that I should not get you guys confused. Let's go back to the line I drew before. So that is just it. Now, the next thing I want us to talk about now is PD array. PD array. Premium and discount areas. Okay? Now, in your trading view, there is a place where you will see Fibonacci. Okay, let me reset this. Apply, yeah. This side, it look like this is called Fibonacci. This one like this is called Fibonacci. Now, what is this Fib level used for? The Fib level is usually used to identify possible area where the market will go to and where the market will retrace back to. That is what the fib is used for. Now, but for this particular topic, we are going to be using it in place of premium and discount for us to be able to spot our premium level and our discount level. I hope you understand. We are going to be using it to spot our premium level and our discount level. Now, if you want to buy a cloth from the market, do you buy when the price is high? I know you won't do that. You don't buy when the price is high, right? You want to buy at the best possible premium price and discount price, sorry. So let's say the price of the clothes is $100 for example, and then you are given a discount price of 30%. Now the price dropped to 70%. Will you buy or will you not buy? You will buy. So the same thing for the forex market. The same thing for the forex market. We wait for the price to come to the discount level so that we can buy. And when we want to sell, we sell at the best price. That is the premium price. If a poor man comes to your shop and a rich man comes to your shop, who will you attend to first? You might tell your workers to attend to the poor man. Since you know that the rich man is going to buy at a very nice and costly price, you attend to the rich man. You want to attend to the rich man yourself. You understand? So if you want to sell, you sell at the best price. The same thing for the forex market. Let me show you what I mean. But first, let's arrange this. Now, when you click on your Fibonacci tool, what you need to do is that you click on it like this, then you draw. You can see you draw it, then click again. Now, how do you set your fib? Now, what to do is that you see this icon here. There will be this icon up here, this one. Setting. You go to setting and come to style. Then what to do next is the only thing we need here is 0, 1, and 0.5. So the first one is 0. You untick this, untick this. This is 1. You leave 1, untick this, untick this, untick this. 0.5. We need 0.5. Untick this. Just untick everything. And then you click OK. You can choose to change the color if you want. So now we have 0, we have 0.5, and we have 1. Now let's go to the chart so that I can show you how to use this fib tool. Okay, look at this. Now when the market is on an uptrend like this, just as I taught you for the order flow, you come down here like this. For the order flow, remember, you take your rectangle tool, come down here, and you mark from down to where the market broke structure, right? You come down here, mark to where the market broke structure, and extend. When the market is selling, you start from the up. You mark from the up down to where the market broke structure. But now, for Fibonacci, it's not like that. For Fib, now if this is the market, now remember I taught you guys on liquidity. I taught you guys about liquidity. Now, when the market is on an uptrend like this, how to mark your Fibonacci? You click your Fib tool. Now you go down to the lowest part of that swing, click on it like this, and draw it or extend it up to the last high. Then click. Your discount price is down here. This is your discount. Your discount price is down here. And then your premium price is up here. Premium. Your premium price is up here. Let me mark this well. Yeah. So down here is your discount price. Up here is your premium price. Just have that at the back of your mind. This is your discount. This is your premium. Why is this your discount? Because when you want to buy, you don't buy when the price is high. This place like this green place is high. You buy when the price is low. So you wait for the price to come down to this place. When the price comes down to this place, now you are satisfied. Now you know that okay, now the price is now at the discount price. I can now start looking for buy. I hope we understand. Probably you saw an order block here. Now that will now be your target. Now, this PDRA is like a confluence for you to know where to buy from and where to sell from. That was why I joined this topic with the order flow, because both of them are somehow working hand to hand. So you might be looking for this place, you might be looking for this high or the extreme. So let's go to the chart now. Let me now show you guys how to apply it on a chart. Now we had a break of structure here, a major break and a minor one here. Now let's draw our fib tools from down here straight to the top. And then now you now want to buy when the market is at a discount price, right? So let's wait and see. Okay, the market didn't come down to the discount price. Let me look for a better example. Okay, I can see one here. This is a break to the upside, and we have this, our fib tool here. Now, okay, price is already at our discount price. Now, remember I told you guys, down here is the discount price, up here is the premium. So if you want to buy, you wait for price to come to the discount. Now, what next should we look for? We look for our order block. This another block, this one. Remember I told you guys, color doesn't matter. This is also another block here that collide with this one. Now, what do I do next? I now go down to my 1 hour or 15 minutes, probably to look for a break of structure to the upside, a change of character. So I just want to show you guys how to use these tools. It's nothing so difficult. Okay, it's nothing so difficult. Okay, let's watch and see what price will do now. Now we have a break already, a change of character here. Look at it. We have this as our high, our low, our high. We have another low, and then the market broke the high. So now we now have a change of character. We're expecting buys now, right? We're expecting buys now. So increase this to 7. So you can see the market is going up already. So that is just how to use your fib tool. You see? So like what I told you guys before, when you mark your order block on your higher time frame, you now come look at what the market is doing. You can see from here to here, it's enough. So when you mark your fib on your order block on the higher time frame, you now come to your lower time frame to look for a change of character. Now, what will now make you to feel like truly this thing is going to happen, this retracement is going to happen, is your premium and discount. Now you know that if the market comes to the discount price, you are looking for buys. Now the market now retrace and come to the discount price. That will now add to your confidence that okay, this market is going. I hope we understand. So let me look for a bearish example. Let me look for a bearish example. Now we have this. Yeah, this was a break of structure to the downside. This was a break to the downside. Now, when the market is bearish, remember, like your order flow, you mark from up here. If it's your order flow, you stop here, right? But for PDRA, you mark from here to the lowest part before the reversal. Now you mark to this place. Okay, let me cut. I'm supposed to cut out this place. You mark to the lowest spot. Let's say now, okay, this market is in this place. You're spotting some reversal here. You wait for it to come to your where? Your premium price. Like I said earlier, when you want to sell, you sell at the best price, at the premium price. You need that premium customer, right? Now you wait for price to come to the premium parts of the market. Then you sell. If you want to buy, you need discount. If you want to sell, you need premium price. Look at this big order block, this long candle. This another block. Hope you saw the candle I marked. This one here. Look at it. Cover all this place down. So now we cannot wait for the market to come to this place. And you look for yourself. Now the market have tapped your order block. What else are you expecting? Sell. I hope you understand. You just look for your confirmation and then you sell. Have you seen that everything is now going hand in hand? Because now, okay, now you mark your tools. Now you know that, okay, from here to here is your order flow. The market is supposed to come to this place to mitigate your order flow. Then number two, the market have broken structure, right? That gave you your order flow. Now the market is coming back. You now put your fib to like this, and you know that this is your 50%. From this 50% upward is where your premium price is. What are you going to do? When the market comes to your premium price and you see good confirmation, you start selling. So you see that that one alone will add to your confluence. Now look at the market have broken structure again. Have broken structure here. Where is your order flow from this high to this place, right? This is where your order flow is. Now you wait to spot reversal. Then you draw your fib from up here down to where the reversal happened. Now you know that, okay, you're expecting the market to come to the premium price before you sell. You just keep waiting. If the market comes to your premium price, look for confirmation, you sell. So the forex market, you don't need to rush. Okay, if it's in your strategy that, okay, sell only when the market is in the premium and buy only when the market is in the discount, you follow that. That is going to really help you to go a long way. The forex market is not like how do I put it? The market is really something else. You will not really know until when it's time. When it's time, when you lose market money from this market, then you will then understand. So that will be all about PDRA.